What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to talk about how we're up $3,000 today. But more importantly, this episode is going to be about covering the covered calls, no pun intended. I want to discuss how to run the wheel strategy like a professional and how to sell covered calls like a professional. So first things first, in order to sell covered calls, of course, you need to have shares, right? Now, in this case, what I'm going to really lock in on is the shares that we have on IBIT. So obviously you guys can see we have $36,000 worth of shares and our average cost is $51.29. Now we got this cost from selling cash secured puts, right? The market was getting beat up last week. We sold cash secured puts and it came all the way down to 45. Now, obviously it was not fun, Friday. Just last week was just not a fun week. I'm sure many of you watching this experienced it within your own portfolios, within your own lives. But yesterday there was huge news in the crypto markets, which caused this massive gap. Now, obviously, if you've been following me for a while, I don't love gaps. Gaps are, they just tend to fill, right? So when you see the market go up, you want to see it go up without a gap. But with that being said, this is a very optimal situation for covered calls. Why? Well, because we are already above our entry, right? So what does that mean? It means we are in a position where we can't lose. Why? Because now we have all of these covered calls open on IBIT, right? Obviously, we still have some puts open and we have some TQQ positions. But again, this video is going to be just talking about these IBIT calls. And you'll notice every single call we have is either at our entry, right? 51, 50, right? Nothing too crazy, just at our entry or right below it, or above 55.5, 55, 56. So what does that mean? It means we're in a position where we literally just can't lose. Why? Because if we get assigned on 1, 3, 500 of these shares, we're going to be getting assigned for very big wins, right? Because you're going to be talking about $400 worth of capital gains on this, right? 500, whatever. And you're going to be talking about premium collection. So if IBIT does continue to soar, at that point, I would have to decide if I want to get assigned on this, right? So even though I'm down technically in the moment, I don't care because I'm either going to be collecting all of this premium and getting out at 55.5, or I'm going to just roll higher, which would allow my exit to be higher and ultimately allow me to collect more premium. And this is how you sell covered calls like a professional. Now, it doesn't always work out this way, right? And I will say that when it comes to the markets, I'm humble enough to accept when the luck strikes because, let's be real. When we were looking at this chart, it was going down hard. And there's really no telling what might have happened, right? In the end of the day, there is never any telling what might happen in the sense of, it could have easily just kept going, right? It could have easily done that. Obviously, in this case, this is what it did. And that's what the market tends to do. This is why option selling is something that I love, right? Because as someone who did trade for years, every time you think you're going to catch a big move, right? Like, let's just say you shorted down here, up here. Like, if you bought puts, you're probably not even profitable on those puts, depending on the expiration and a bunch of other factors. But, every time I would catch a trade and think, oh, I'm finally catching the move, something like this would happen, right? And it goes both ways. Obviously, when you look at something that gaps up, right, like this, it comes back. So it just becomes very difficult to trade. And this isn't just Bitcoin. Obviously, Bitcoin's an extremely hard chart to trade. But, the Nasdaq's the same way. Every time you think you're finally catching a move, it just reverses every single time. So, trading becomes extremely difficult. But option selling, not to say it's optimal, but when you consider all of the things that make trading so hard, it's easy to see why selling options is so much easier, right? Because now I'm in this position where if it comes back down, great. All of my covered calls are going to become worthless very fast, which is going to just allow me to, collect more cash against my shares. And if it goes up, great. My shares are going to be up. And at that point, I'll make a decision what to do with my covered calls because I don't mind just rerunning the wheel strategy, right? I'm not afraid to sell more puts. Obviously, I still have puts open on IBIT. I have 100 shares worth of puts, 200, 400. So I have 400, 500 shares worth of puts still open on IBIT. I'm not afraid to lose this 700 shares and rerun it. Obviously, in the end of the day, rolling is great when it comes to cash secured puts, but when it comes to covered calls, rolling is really even better, right? Because when you think about how much you're winning, it's like you're rolling your covered call higher So now you're going to collect more premium and you're getting a better exit, right? So rolling covered calls is really even more optimal than rolling cash secured puts. Because if you think about it, when you roll cash secured puts, you're doing it a little bit out of fear in the sense of, oh, if the market keeps crashing, I want to get a lower entry, which, yes, is a very fair thought process. It's an awesome thought process, and it's a great way to maneuver the markets. But when it comes to covered calls, it's like, oh my God, you're just winning in all ways. Now, especially when you roll the way I do, where you're always looking to collect a credit, right? And that's basically how I roll. Let's see, does it show it here? No, this wasn't a roll. This was just me opening a position. But yeah, when you roll for a credit, now you're collecting more premium, and as the asset that you're in is rising, it's just a win all around. Now, IBIT, that's a stock that I don't mind being in for as long as I need to be because, in the end of the day, it just tracks Bitcoin. A new position I'm in is TSLL. I'm obviously down some money, but, I'll just pull up the chart just to give you guys some thought into why I took it. So I was looking at Tesla, and to me, I could absolutely be wrong. Obviously, it's coming down a little bit now. But I do believe that Tesla is approaching a zone that could be a little bit of a bottom. Now, notice how I'm very generous with my zones, right? And this is, again, my issue with trying to be a day trader is like when you start to try to map out support zones, resistance zones, supply, demand, etc., it just becomes so large that you physically can't trade it. I mean, obviously, in this case, this zone could be from 290 all the way to 220. When it comes to option selling, it's very different because, I took my position on TSLL, which is the leverage version of Tesla. And, in the end of the day, I don't know how much further Tesla can go. So I just know that it looks like it's ready to bottom out. The numbers are good, right? There's nothing wrong with Tesla as a company, right? Obviously, when we look at the financials are better than ever. If anything, maybe the politics behind it, right? People maybe are a little more hesitant to purchase Tesla because of what Elon Musk is doing politically. But then there's also a whole world of people that are purposely buying Teslas because of what he's doing politically. So in the end of the day, I don't see anything wrong with the company fundamentally. Obviously, it's continued to crash. But ultimately, I do believe we are approaching a buy zone. And that's why I decided, I'm going to sell some puts on TSLL. I would have sold maybe one put on Tesla, but it's expensive, right? $29,000 is very expensive as opposed to $1,300. I sold 3 of them. That put up $3,900 worth of collateral in my account. And that's the thing about risk, guys, right? Is like, you could look someone in the eyes and say, oh, TSLL is so much riskier than Tesla. And yes, percentage-wise, absolutely. But when push comes to shove, even if you bought the top of TSLL, if you bought 100 shares, let's just say here, that's 3,300. But if you bought 100 shares of Tesla, up here, so, you'd be down 20 grand, right? Or whatever, 15 grand. So it's like, in the end of the day, risk is all relative to the dollar amount, and you need to keep that in mind. And that's why option selling, the only argument about why option selling is more risky than option buying is that for option selling, you're always putting up 100 shares worth of collateral. So, if you get involved in the wrong stock, 100 shares could be very costly as opposed to as an option buyer, you might have to buy a $300, $400 premium. Now, obviously, when you buy options, the chances of you losing it all is very, very high. But at the same time, not how many people can stomach a $15,000 loss where an option buyer, you're never really going to be in that position. Again, you just have to be able to see both sides of the story, right? Like when you go through life blinded and, you have blinders on and you just, only see what you want to see. That's the problem with social media these days, right? Is our algorithms are wired to show us what we want to see as opposed to what we need to see, right? Maybe if you're, politically left, right, you're going to be getting a lot of liberal content. If you're politically right, you're going to be getting a lot of conservative content. And now I'm not here to say which one is right, which one is wrong. But the point is, you need to be able to take everything you get in life, everything you get through your algorithm with a grain of salt. And when it comes to the markets, it's the same way, right? If you identify as an option seller, obviously you have to understand that there's plenty of worlds where option buyers are going to get the better hand on you. And if you've been selling options for a while, then you would have 100% of experience what it's like to be underwater on a position. And if you're underwater on a position, that means someone who bought the option on the other side is winning. Now, that doesn't mean you should just flip the boat and start buying options. If anything, maybe, what you could do is, oh, you sold a call. Like obviously I sold some 55 calls. Maybe I could buy some 52 calls just to hedge, right? And try to win on all sides. Yes, you could do stuff like that. I wouldn't just jump the boat and say, oh, I lost this trade as an option seller. I'm going to become an option buyer, because option selling gives you that time, right? Option selling is where you have your leverage. Option buying, you don't have any leverage. You just have to win the trade. The only leverage you have as an option buyer is the simple fact that you're not putting up a lot of capital, right? So in this case, I truly believe this is like an amazing scenario where we're above our cost basis. Obviously now, I don't really care in the sense of, all right, if it dumps, it dumps. Like, do I want to see it dump? No. But would I mind having 700 shares and then winning on all of these sells, all of these covered calls, and then rinsing and repeating? Absolutely not. And again, I don't want to get below my cost entry basis. At the end of the day, the perfect world is that we rise, ultimately I roll, and then eventually, it dumps. Like in a perfect world of a covered call trader, right? I'll show you guys. Would be like, obviously at this point my entry is 51. I'd want to see something like, continue rising. Sorry. Obviously this is where my covered call strikes tend to be. And then right around my expiration, you want to see something like this, right? So then it stays above your entry, right? Because my entry is here. Okay, so let's just draw it out for you guys. So my entry is here. My covered call price strikes are like right here. It's like it stays here, expires here, perfect, and then continues the ride up, right? Because then you're winning on all trades. And again, when you buy options, you lose the leverage, because if you bought an option, even if you bought a call here and you don't take profit here and then this happens, chances are you're not even going to be up on your position, depending on your strike, expiration, all that. But, that's just the moral of the story. Now, I get it. It's not a perfect world, right? In our world, our reality, what's most likely going to happen is something like this, or maybe something like this where it flies up. Obviously, crypto is extremely volatile. Who the heck knows? But all I do know is, as someone who owns 700 shares in the moment and a bunch of covered calls, if we fly up, great, I'll roll my calls higher. If we fly down, great, my calls win, and then I'll have to just decide what to do, right? Because you don't always want to sell covered calls, guys. That's the thing. Cash secured puts, in my opinion, it's never a bad time to sell cash secured puts. When it comes to covered calls, it's not always necessarily the same, right? Because if I would have sold covered calls here, which I did, right, you would know that some of them are completely underwater. So let's see the total return, right? So notice how these covered calls, actually I already rolled them, so you can't see it. But, when I woke up this morning, these covered calls were down hundreds of dollars, whichever ones they were. It might have been these. I don't know. There's a lot of positions to keep track, right? I guess you could see with this TQQQ position, right? I sold the covered call. When did I do it? Date sold 2/28. So let's pull up the chart. So I sold it here, right? And now this happened. Now, does it look like it can come back down? Absolutely, right? It looks like it can easily do this, in which my covered call would win. But of course, it looks like it could easily do this too. And again, this is why I'm not a trader, right? I understand the market. I follow the market. I study the market religiously. I've put in so much time watching the charts, which is what led me to realizing that option selling just makes so much more sense than trading. Because, these scenarios are very inherently possible, and trying to predict which one is actually correct, it's basically impossible. That's why anyone who does trade always ends up, it's not about winning and losing, right? Like the best traders in the world have a 50 to 60% win rate. Very similar to the casino, right? Even the casino games where they have the highest odds, it's still only 55, 60%. The odds aren't as crazy as you ever think. And that's the thing. It's like, when it comes to trading, the chance of you winning or losing every individual trade is basically a 50-50. It's kind of what you're able to do after that, right? Are you able to cut the loss? Are you able to let the winner ride? There's just too much involved that, in my opinion, the average person, it's just so much easier to just, do cash secured puts, until you get assigned, right? And then ultimately do covered calls, until you can't roll anymore, and then you get assigned and just win all around. So in the end of the day, option selling on assets that you truly believe in, in my opinion, you just can't beat that strategy, because you're just giving yourself all the leverage. You're becoming the house as opposed to becoming the gambler. So I hope you guys learned some insights into how I manage my positions, how I'm managing the market, how I'm managing these covered calls and these shares. Obviously, it's been a good day so far. I'd be very happy to make 2,000 to 3,000 every day on this account. Obviously, it's not going to happen, right? It's not what I expect. It's not really even possible. But, I'll just take the day. I'll take the win, right? I'll take all of these winning positions. Obviously, something like this leap. This leap might be down 988, but it's very hard to calculate actually where we're at on this position because I have been able to collect $300, $400, $500 worth of covered calls against it already. So I just know that we have so much time until 2027 that by the time if I was to lose every single penny on this leap, I would like to believe that I would have collected more than what it cost. And if I didn't, then I would like to believe that over the 2-year span, maybe I lost 3,700 on this position, but at the same time, if I collected, let's just say 3,000 worth of premium, to lose $700 over 2 years, that's not something that I'm going to lose sleep over, right? If you've been following me, then you would know that, within 1 week we were down 11 grand, So obviously it feels nice to be getting that money back. There's no doubt in my mind we will be back above 100K, back in the green. Literally no doubt. It's just a matter of time, right? Like, stop taking so much credit when the market goes your way and stop taking so much blame when the market goes against you. The market is not you, right? The market is the whole world. And that's the other thing I don't love about trying to be a trader is I find that traders take too much credit when it's really just a coin toss and a button click, right? If you think about it, you click a button that says go long, you click a button that says go short, and then it's all in the market's hands, right? So stop taking so much credit and stop taking so much blame. People have followed me and have tried to hate on me. It doesn't get to me because it's like, again, I'm just buying shares and selling puts on great assets that the whole world runs on. So it's like, okay, you can come at me all you want, but IBIT is literally just Bitcoin. I mean, we can pull up the IBIT chart and put it next to the Bitcoin chart. You can see for yourself. Let's see. How do I go back? That's not going to do it. Let's see. Let's give me 1 second. And I just want to show you guys. I just want to prove a point here, right? So let's see. We're gonna pull up the 2 charts, and I'm just gonna show you guys real quick, and then I'll wrap up this video. All right. So here's the Bitcoin chart, and here is the IBIT chart. All right, let's put them both on the daily. Okay, they're both on the daily. So obviously IBIT has only been around for a year or so, but when you look at the charts, they're virtually identical, right? Obviously there's gaps on this because it follows the stock market. That's the only real difference, but everything's the same, right? The double top, the patterns. And now if we do the same thing with US 100 and then we pull up, TQQQ, because these are the assets I'm in, again, virtually identical. So, at the end of the day, I don't need to take credit or blame, right? I don't care what anyone has to say because I'm involved in assets that the whole world runs on. Am I going to be calling myself an idiot because TQQQ had a red week? No, right? I'm just managing my positions. Am I going to call myself an idiot because Bitcoin had a red week? No. So stop taking so much credit. Stop taking so much blame. Maneuver around the market, be smart, and ultimately you will succeed. So I hope you guys enjoyed this video. I hope you learned a lot. Make sure to like, make sure to comment, make sure to subscribe, and I will see you in the next one.